what an interesting week that I had. And let me fill you guys in a little bit because it's going to inform you guys more and more and more about a lot of stuff. So recently I just did an interview with Jaspreet Singh. He's of Minority Mindset, a brilliant young man, and I follow all his videos. So if you want to check out that video I did with him, please check out this video right here. But him, along with another friend of mine, one of my good friends, he used to be the CEO of Pep Boys. Now he runs a huge auto manufacturing plant. And I had conversations with both of them within the last week. And it was kind of cool, a response that I got from both of them. And it was almost identical. The conversation kind of went like this. I said, what do you expect the Fed to do at the next meeting? And then I also proceeded and said, what do you expect in the housing market and some other things? Well, friend of mine who used to be the CEO of Pep Boys now also sits on the board of a huge housing construction company, okay? But they both had the same response. They're like, I don't know. And it was kind of cool. They're like, I defer on answering that question because I truly don't know, because there's a 50% chance I'm right and there's a 50% chance I'm wrong. I don't like those odds. I like when I know with certainty. So I don't know with certainty what the Federal Reserve is going to do tomorrow. I don't know for certainty what the housing market's going to do, nor does anybody else. So if you're watching everybody's channel, hey, the housing market is going to go crazy and continue to rally, be cautious. If you also watch those out there that are saying the housing market is going to crash, guys, all I got to say is we don't know. Educate yourself, and that's what I try to do on this channel. Give you guys the tools so you can make the valid decision on your own. Where I can fill a point in is if once you decide you want to buy a home, it could be a single-family home for a first-time home buyer. It could be an investment property. I can help you choose and make sure you get into the right mortgage products, okay? So that's what I want my context and my channel to be. I'm out there to look and help millennials and first-time home buyers and first-time home investors with that transaction. My job isn't to educate you guys on when and how to buy or when and what to buy. It's on how to buy it. Okay, so that's some lessons that I just learned. So without further ado, let's get over to what's happening in the news right now. So what's happening over this week is the Federal Reserve. I'm going to have a live event tomorrow, so join us then, and we're going to see what the Federal Reserve does. But the biggest point here we want to focus in on is what is the future guidance? What are they telling us they're going to do? We want to get into their psyche to say, what do you expect going down the road? They might not even know, and that's okay. But if you don't really know with certainty what's going to happen, maybe the Fed should take their foot off the gas pedal a little bit just to give things time to settle. One big thing or area that's scaring me right now is a post that just came out just this morning from Bank of America, and it's right here. They say that credit card debt is the highest it's ever been in history. So my one concern that I've been focused in on, you guys, if you follow my channel, you realize this, is I keep saying, where's the jobs? People are not going back to work. They're saying there's a huge, robust jobs market, but there's tons of vacancies. We're going to have a JOLT index out later today. There's 10 to 11 million job openings out there. So there's almost 2 job openings for every person looking. So let's go over to the headlines that we're going to see, because you can see that's part of the news that's coming out today. So the JOLT index right here that you're seeing on your screen, this is the economic calendar for the week. The JOLT index actually tells us how many job openings there are. The last report was 10.053 million people or job positions needed filled. Okay, and there's basically 1 or almost 2 job openings for every person looking. So again, the scary part is the job market isn't really, really, really good. And the Federal Reserve came out and said, we're going to put pain on those out there, especially in the job market. So now if we have consumer debt or credit card debt at basically the highest ever, and we're expecting pain in the job market, so meaning less people have jobs, what does that mean for the credit markets? What's that mean for foreclosures? What's that mean for delinquencies? Not a good sign. Okay, so the next piece of the puzzle we have is the Federal Reserve's coming out tomorrow. We're going to do that live event, like I said, and we're going to focus in on what they have to say. Okay, so that's the big focal point today. But I'm asking you guys, if you would, please check out the end of this video. I have collaborations that I did with Jaspreet Singh of Minority Mindset. I think you're going to find that very, very interesting because we had about an hour conversation and I cut that into 2 parts. So check that out. The first part is the Fed and real estate. And then the second part, we started talking about cryptocurrencies and other investments. So you can see through here, the rest of the week, we see right here, the JOLT index that's coming out today. Then we have ADP employment numbers. Because remember, the Federal Reserve has 2 mandates. It's full employment and price stability, so AKA inflation. So if we go through here, look at what these 2 days are giving us. Manufacturing index, how robust the manufacturing sector of our economy is, because if it starts to deplete, they're going to start to be more and more job losses. The JOLT index, how many job openings there are. Then we have the ADP payroll numbers coming out tomorrow. We have crude oil inventories. Why we focus in on that is because that's a huge part of the inflation number that we're seeing in energy. Then we have the FOMC meeting. They're going to come out and tell us exactly what they've decided to do and why. And then at 2:30 tomorrow Eastern time, they're going to come out and they'll have a conference, basically a conference where Federal Chairman Powell come out and answer some. He'll give his speech and then give his comments on what he expects to happen, next few meetings. That's our big focal point. So I'm going to do that live tomorrow. So without further ado, what's all this information that we have today really doing to the markets? Well, we have the MBS markets skyrocketing. So people are positioning right now themselves for tomorrow what the Federal Reserve is going to do, because whatever they do, the markets are going to turn one way or another. This is saying, well, we might have some good news from the Fed, because what you're looking at on the screen right now is what's happening to the mortgage-backed securities market. It's the bond that trades on Wall Street that's yield, is the biggest component of the mortgage rate. So we push this yield over to mortgages, and that's the biggest part of the mortgage rate. What you're seeing on your screen right now is what's happening to the price of the bond. When the price goes up, it has an inverse relationship with yields or mortgage rates. When the price goes up, that means rates come down. So 52 ticks up means we're probably going to get about an eighth of a reduction in rates. Well, where did rates close last night? Right here. We might be teetering back at the 6.99 rate. So you can see right here, the 30-year fixed as of the close of yesterday was trading at 7.13. If we drop about an eighth, we'll be right at 7 or teetering back in the 6 mark. Look where we were just not too long ago. The 52-week high on the 30-year fixed rate was 7.37. Might hit 6.99 today. So if you want to find out where rates are, you can go to Mortgage News Daily. I have the post down below. Check it out. But these are generic rates. What this is Mortgage News Daily. They survey mortgage lenders all over the country, asking them to say, what is your mortgage rates today on the 6 top products that people use when they buy or refinance homes? Here they are. So these are not my rates. These are not in any individual bank or lender's rates. To find out that, what I need you to do is go over to my website. But before we get there, if you're having any credit problems, if you're starting to get a little default on things, you want to check your credit scores, or things going good, check out a website I created. It's called Credit Scores and More. There's a slew of information here you can learn from. One thing I'd ask you to do is just click the free credit scoring system. It's free to you guys. There's no strings attached. I don't sell the data. It's just right there. What I ask you to do, though, is there's going to be a lot of perks to this. There's going to be a lot of upgrades and everything. Don't do it. Just the free version is perfect. But if you want to find out what rate we can qualify you with, all I need you to do is go to therateupdate.com. Here's our website. The one thing I want you to do is, if you're interested in getting pre-approved or in a mortgage, all I need you to do is either book a meeting right over my head or give us a call, 844-775-5626. Or if you've already got a quote, most people say, I was told to get 3 quotes or 2 quotes or whatever. I encourage you to do so. But what I encourage you to do is go out, and if you get quotes, tell your lender, I'm going to give me your best foot forward, because I'm going to compare your offers. And if you don't win, I'm not going to come back to you. Okay, that's what I need you to say, because you don't want to go back and forth and back and forth and back and forth, because you're probably going to end up with nothing. So how do you do what I'm asking you to do? So if you got a quote or 2, go to my website and hit loan estimate. We're going to do a free review of that loan estimate for you. So you're going to click there. You're going to fill out your information. The biggest thing here is, please let us know how you want to be contacted. A lot of you guys don't want phone calls. You don't want text. You just want emails or whatever. So we'll abide by your wishes right here on how you want us to get back to you. But what you're going to do is you're going to drag and drop your loan estimates right into here. Give us a couple hours to review that, and then we're going to get back to you however you advise us to get back to you right here. So I hope you enjoy my channel. If you do, it's going to be a big week this week. Tomorrow, we're going to have a live event. We're going to go over what the Federal Reserve does. We're going to do that live. And then we're going to have another live event tomorrow, which is going to be the loan estimate review. It's going to be live. We're going to choose 3 or 4 loan estimates that people send in. Don't worry, we're not going to put your names up there or addresses or any pertinent information. We're just going to use the numbers. And you're going to see what we do, how we do it, and how effective it's helping buyers. Most of the buyers that we're qualifying with, sending in the loan estimates, we're either getting them a lower rate, lower fees, or C, all the above, lower rates and lower fees. So you have nothing to lose and everything to gain. So God bless, guys. Thanks so much for watching. If you find value in my channel, all I ask you to do is give me a thumbs up, subscribe down below, hit the bell every time I post a video, you get an alert. Take care, guys. I'll see you tomorrow because tomorrow's going to be a huge day. See you then.